Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. One stock that I have liked for almost a decade now and continue to believe in their future is Axon. I want to get into why this company has a great strategy and how their financials continue to get better and better. The first thing to start off with Axon is what they do and what drives them. They put out this mission slide, and I think it really clearly defines what they're trying to do. Axon's mission is to protect life. So they started with obsoleting the bullet. That brings you to the taser business, reduce social conflict. That drives body cameras and enable a fair and effective justice systems. That gets to the SaaS products that they're building on the back end. This is really the company's history right here is these three product lines, and I'll show why it's such a powerful financial business as a result. This is another look at some of the same information, Axon 1.0, so they're calling that the pre-2010 version, basically just a taser business. This was not a great growth business. It was a decent business. They did decent margins and they were profitable. What they really took off when they moved to Axon 2.0, that was getting into body cameras and then the cloud service called evidence.com that was on a subscription product on the back end. That's when the company really started to grow, started to generate some of those subscription margins. And then as they did that, they're moving into Axon 3.0. Then they're able to add all kinds of services, Axon Records, Axon Dispatch. They're really trying to tie all of these products together. And I think that is the way to think about this company long-term is it makes hardware and software as a service. And when you tie those two things together, it's a very powerful business model. Here's a look at Axon's revenue growth since 2017. You can see that revenue has more than doubled over that time. But what's really impressive is tasers have actually been pretty solid at 17% growth, but sensors, which is where they put their body camera business, 37% growth, and Axon Cloud, 43% growth. And that's a number that continues to grow really strongly as they improve both their installed base and the services that they're able to offer customers as well. So this is basically a flywheel that I don't see slowing down anytime soon. You can see here that strong growth is scaling with profitability. Year over year growth, maintaining in that 20% range is really impressive for any business, especially a business that's getting close to doing $1 billion in revenue at this point. And adjusted EBITDA margins continue to rise. Now, adjusted EBITDA is basically a proxy for cash flow earnings before interest, taxes, depreciation, and amortization. That has gone from $40 million in 2017 to $178 million in 2021. Here's what's really going to drive Axon over the next decade, and that is bundling all these products together. You can see on the left here, SaaS annual recurring revenue has gone from $93 million in Q2 of 2018 to $368 million in Q2 of 2022. What Axon is actually doing is not just saying we're going to sell you Axon.com or their dispatch service as a SaaS service like you would another software as a service. They're actually bundling together their hardware. And so that's what these bundles are on the right, the total percentage of revenue that's tied to subscription bundles. That includes not only those software services, but also tasers, body cameras, cameras in vehicles, and even drones at certain points. 80% of revenue is now tied to those bundles. What's really impressive is some of these subscriptions are actually a decade long. They started as 3 to 5 year contracts. Now we're seeing 10-year contracts. So this is recurring revenue that they're going to have for many, many years in the future. Now, one thing I'm not highlighting here is the consumer side of the product because that's a business that's just getting started. But I will mention that they have the optionality to grow into a consumer safety company. They have released tasers for the consumer market. That's something that they think could be as big as their current business. I'm a little bit skeptical about that, but I do like that they're taking a shot at becoming a consumer company. I could see this as a company that not only sells tasers, but also security products tying into that evidence.com backend that they already have, competing in both home and personal safety. That could be a really interesting growth opportunity for them. So keeping Axon's investment thesis simple, body cameras are Axon's iconic product, but the future of Axon is the platform of interconnected hardware and SaaS products that make law enforcement more effective and safer. I really like the mission of the company, but then on top of that, they have the business model to match, making that hardware and software tie. As they add more and more products to that mix, they're going to continue to increase the revenue per officer and also the margin per sale. I really like the long-term contracts that they can sign with law enforcement agencies. It's not a cheap stock, $8.4 billion market cap, trading about 10 times revenue, but given a growth rate in the 20 to 30% range, I think this is a stock that's worth paying up for. If you like what you learned here, please subscribe to this channel as we dig into more great investment ideas and disruptive companies in the market, and I will see you next time.